Hi all, today we're going to continue the tax theme, talking about the capital gains on UK residential property and how to report the gain once you get the completion statement through from the solicitor, which should have all the details on there that you require to make the report. You would think, but there is a number of steps that you have to go through in order to report the gain digitally within the 60-day deadline. The first and most obvious step is to have a gov.uk one login. If the property is held jointly between husband and wife, both will need their Gov1 logins to have been worked through. To get a Gov1 login, you need only an email address and a password to start, but depending on the government service you want to use, you'll also need a UK mobile phone number to receive security codes and specific identity documents if the service requires proof of who you are, which it almost certainly will. And to cut a long story short, if you have your passport and photo ID driving license, you'll pretty much sail through the identity requirements. So the basic account setup, an email address, a secure password that you create, and a phone number, preferably a UK mobile number to receive security codes via text, or an authenticator app if using a non-UK number. So proving your identity, you'll be prompted to supply the additional information required, which, as I mentioned, may most smoothly proceed with the passport and UK photo driving license, and a compatible smartphone. If all else fails, you can go to the post office and get identified there. If that's not sort of convenient and you're not sort of digitally proficient. So the account you need, residential property has its own account called the Capital Gains Tax on UK Property account. You still file a self-assessment as an annual return, and you just need to make sure that when you check your self-assessment, the resulting tax liability has taken account of the fact that you've paid the capital gains through your capital gains tax on UK property account. Before logging in, so you've got as far now as the government gateway ID. Before logging in, you need the completion statement is the ideal tool, the property and asset details, so full address and exact ownership dates. Ideally exact exchange and certainly exact completion dates, and the value calculations, the purchase price, the sale price, and allowable costs, so solicitors' fees, estate agent fees, and structural home improvements. That can be very important. You do get a tax-free allowance deduction of £3,000 if it hasn't already been used, which makes some inroads. And the online account will help enormously by calculating the gain, and then that forms part of your submission. Getting an agent or an accountant to do it, the accountant will pick it up from the point that you've received your capital gains tax on UK property account number. And you're looking for a number with a sort of X at the front. As long as you've got that, your agent can use that number to get a digital link to get authorized to operate the account on your behalf. So from the point where you've actually got the number of the capital gains tax on UK property account, things should proceed pretty smoothly, but it can be a little bumpy getting there, so don't hesitate to ask for help. If we take the standard case of, say, a holiday property that you've no longer need, you report the sale within the deadline, like any UK residential property, and it should be pretty straightforward. The 60-day countdown clock begins on the completion date when the keys and funds change hands, not the contract exchange date. There's no particular need to dwell on penalties because, if you're watching this, I'm assuming you're going to crack on and get this done. Even if it can be, the digital side of it can appear a little daunting at first. So it impacts typically buy-to-let landlords, second homeowners, or individuals selling inherited properties. And we noted an important exemption, which is if the property was your main home for the entire duration of ownership. It will qualify for 100% private residence relief, PRR, or if you sold at a loss, you do not need to report it or set up an account. We talked about another interesting relief, which was for people who bought a home for a dependent relative back in the 80s. And that's in a separate video which you can catch. So the tax rates and allowances, what you pay in terms of capital gains tax depends on your other income. So for basic rate taxpayers, you'll pay 18% of the portion of the gain that falls within the basic rate band, so taxable income up to 37,700 above the personal allowance. Higher rate and additional rate taxpayers pay 24% on any portion of the gain pushing past the basic rate threshold, which is relatively easy to do if you're selling a property that you've held since the 80s. You could you might have bought it for 40,000 and be selling it for over 200,000. So the chances are that when compared with your total income, it's quite possible for the gain, even split in this case between husband and wife, to push into the 24% band. So we start with the gross sale price, we subtract the allowable selling costs, And I'm assuming this bit of the calculation is familiar to you, and it'll certainly be set out step by step in the capital gains tax account. You can subtract the allowable acquisition costs, and importantly, you need to evidence capital improvement costs, so structural renovations like extensions or rewiring. If you've added a loft or something like that, that's quite frequently happens when an investment property is improved. And you upload that information separately as a PDF. So creating the CGT property account, the starting point, as we've said, is the Government Gateway ID or the Gov1 login credential. And then you follow the prompts to register specifically for a capital gains tax on UK property account. And HMRC will issue a unique CGT account number, which will go to your email. Filing yourself, you'd simply select Start a New Return using an accountant or agent. Just provide them with your new CGT account number, and then they will use their HMRC Agent Services account to send a digital authorization request. Log back in to the property account to accept the request, and they can then make the return on your behalf. So that's important that you log back in to accept the request. And when all said and done, you then make the payment. On submission, HMRC generates a 14-digit payment reference number starting with X. You must use this reference to pay online via bank transfer or debit card before your 60 days expire. It's common when you come to pay tax. It's quite an emotional thing, and when you sort of think back to the 18th century, there was huge skepticism about paying tax, and Adam Smith, who is the Shakespeare of economics, memorably described how government tends to attract domineering people who and of course that's a bit of a quote for our times, thinking of our US friends who have elected to have the most sort of domineering individual in recent times that I can think of in an advanced Western democracy. It can get a bit emotional, and you can find yourself struggling when you don't really need to, in which case simply ring the agent and they will do the thing cost effectively and smoothly for you. So that's all for now, and see you next time. Bye for now.